and welcome. Today we're going to talk about something that's absolutely essential in global trade, the letter of credit. And specifically, we're going to focus on how very small mistakes, what the industry calls discrepancies, can cause some really big financial problems and stop international payments right in their tracks. So let's just start with this question. Could one wrong word on a piece of paper actually block a huge payment, say $100,000? And the answer to that is, believe it or not, a definite yes. You see, in the world of international trade finance, banks work with an incredible amount of precision. They just don't have any room to guess or interpret what you meant. And that's exactly why understanding their process is so critical for anyone who wants to get paid on time. And really, this is the main problem we're here to solve. We're not talking about complex legal issues here. We're talking about simple clerical mistakes. A typo, a wrong date, things that seem small. But these little mistakes can freeze up your payments, really mess with your cash flow, and even put a strain on the relationship you have with your trading partners. By the time we're done here, you'll have a much clearer picture of what these errors look like and, more importantly, how to avoid them. So first things first, what exactly is a letter of credit, or an LC, as you'll often hear it called? Well, at its core, it's basically a conditional promise from a bank. And that word, conditional, is everything. I really want you to focus on this phrase right here, perfectly compliant documents. Your payment, the entire deal, it all comes down to those three words. So here's what we're going to cover. We'll start with the most important concept, the rule of strict compliance, which is the foundation for all of this. Then we'll walk through the most common mistakes you'll find, breaking them down by document type, financial, shipping, and all the other supporting papers. And we'll wrap things up with a really simple, practical checklist you can use to put all of this into action. All right, let's get into the single most important rule in the entire world of letters of credit. Seriously, this one idea dictates every single move the banks will make. You have to get this idea locked in your head. Banks deal in documents, not in goods. The person at the bank checking your paperwork has never seen your products and never will. They have no idea about the quality of the t-shirts you're shipping. Their one and only job is to make sure that every single word on your documents is an exact match to what's written in the letter of credit. And why is that? Because for the bank, those documents are their only security. They are the proof that the deal was done as promised. This quote really says it all. For the bank that's making the payment, the paperwork you submit isn't just about the deal. In their eyes, the paperwork is the deal. And so there is zero room for interpretation, no good faith assumptions. It has to be perfect. And this leads us to the formal definition of strict compliance. Probably the best way to think about the bank's document checker is to imagine they're not a person at all, but a very literal robot. This robot has a checklist, which is the letter of credit, and it simply compares the documents you submitted against that list. It can't understand typos, it can't figure out what you meant to say, and it definitely cannot accept close enough. Every little detail must be an exact match. Okay, now that we understand this rule of strict compliance, let's see how it plays out in the real world, starting with the first group of documents, the financial papers. These are the ones directly linked to the money changing hands. Now, the draft, or what's sometimes called a bill of exchange, is your formal request for payment. And it's amazing how many simple mistakes happen right here. For example, the draft might be made out to the buyer, but the LC says it has to be drawn on the issuing bank. The payment timing or the tenor might be wrong. If the LC says payment is immediate, that's called sight, but your draft says pay in 60 days, it's going to be rejected on the spot. And of course, something as basic as the amount in words not matching the amount in numbers, well, that's an instant problem. The commercial invoice is another major place where errors pop up. The description of the goods has to be a perfect mirror of what's in the LC. So if the LC says 100% cotton t-shirts made in Vietnam, your invoice can't just say cotton shirts. Another frequent mistake is adding extra charges that weren't authorized. Let's say the shipping terms are FOB, which means free on board. That term carries a very specific meaning about who pays for what. If you suddenly add a local handling fee to your invoice, that's a discrepancy. This table here is a great example. On the left is what the LC required, and on the right is the mistake on the invoice. T-shirts becomes shirts. To you and me, that's a tiny change, but to that bank checker, that robot, it describes a different product. And look at the second one. The shipping term changes from FOB vessel to FCA airport. FCA means free carrier. These two terms completely change who is responsible for the goods and when, creating a huge conflict with the LC's conditions. So that leads us right into the next critical area: the documents that prove your goods are actually on their way. These transport documents are looked at just as closely as all the financial paperwork. When you're shipping by sea, the bill of lading is king. The bank and the buyer need to see what's called a clean bill of lading. That just means the shipping company received the goods in good condition. But if the carrier makes a note on the document, something like packaging damaged or 5 cartons crushed, it becomes an unclean bill. That is a massive red flag and a clear discrepancy. And of course, a late shipment, even by 1 day past the LC's deadline, is one of the most common and absolute reasons for rejection. This example couldn't be clearer. The letter of credit demanded that the latest possible shipment date was October 15th. The bill of lading, which is the official proof, shows the shipped on board date as October 17th. This is an open and shut case. The deadline was missed, and the bank will reject the documents based on this alone, no other questions needed. Now, for air freight, the logic is exactly the same. It just uses a different document, the Airway bill. It has to show the correct departure and arrival airports, exactly as they are written in the LC. It needs to be properly signed by the airline or their agent, because that's the proof they've actually taken your goods. And it can't have any surprise charges for the buyer to pay if the LC said everything was prepaid. Every single detail has to line up. Okay, so beyond the main financial and transport documents, an LC usually asks for several other supporting documents. Think of these as the final pieces that have to fit perfectly into the puzzle. Insurance is almost always required, and it's the commonplace for mistakes. A classic one is being underinsured. For instance, the LC will often require insurance for 110% of the invoice value. The extra 10% is there to cover freight and potential lost profit for the buyer if something goes wrong. If you only insure for 100%, that's a discrepancy. The insurance also has to be effective on or before the shipment date. If your policy is dated even 1 day after the ship sails, then technically the goods were uninsured for part of the journey. That's another clear discrepancy. And finally, let's talk about some general mistakes that can sink the whole ship, so to speak. There's almost always a deadline for presenting the documents to the bank after shipment, usually around 21 days. If you miss that, it's called late presentation. Trying to present documents after the LC itself has expired is, well, obviously a fatal error. But maybe the trickiest issue of all is inconsistency across the different documents. This slide shows the danger of inconsistency perfectly. The invoice says the packages are 50 cartons, but the bill of lading calls them 50 cases. Now, you and I know that those words probably mean the same thing in this context, but our document checking robot, it just sees 2 different words. It can't make that leap. That inconsistency is a discrepancy, and it will block the payment until it gets sorted out. So we've now gone over all the major types of errors. I know it can seem like a lot to remember, but the solution is actually pretty straightforward and methodical. And that brings us to our last section, a practical checklist to help you feel more confident when you're handling these deals. Here are the 5 key steps to prevent these headaches. 1. That letter of credit document is now your Bible. It is the absolute guide for everything you do. 2. Using that LC, create your own master checklist of every single requirement. 3. Use that checklist to carefully review every single field on every document. 4. Once all the documents are done, check them against each other to make sure things like names, weights, and descriptions are perfectly consistent everywhere. And 5, this is maybe the most important one. If you are ever in doubt about anything, ask your bank for clarification before you ship. It's so much easier and cheaper to fix the LC beforehand than it is to fix discrepant documents later. So as we finish up here, just take a second to think about your own process. Now that you've seen these common pitfalls, what's the first practical step you're going to take to make your document checking better? Will it be creating that master checklist we just talked about, or maybe just setting aside more time for that final cross-check? So to wrap it all up, the key takeaway is that banks work on a rule of strict compliance, where the documents are everything. By paying very close attention to your financial, shipping, and supporting documents, and making sure everything is 100% consistent, you can avoid most of these payment delays. We really hope this breakdown was useful. If you have any questions, please ask them in the comments below. And if you found this helpful, let us know by liking the video. And make sure you subscribe for more deep dives into the world of international trade. Thanks so much for watching.